First things first, you've got to head over to the trading view. That's where all magic happens, and once you're there, just pull up any market chart you want to analyze. Me, I usually go with the Bitcoin against USDT on the 15-minute time frame. But here's the thing, the setup works on literally anything: crypto, stocks, forex, commodities, even options: SPY, Tesla, Nvidia, Triple Q, Apple, Meta, AMD, Amazon, Microsoft, it doesn't matter. Next, click on the indicators and in the search bar type VWAP price channel and click it on the results to add it to the chart. Immediately you'll see the VWAP line appears with a high and low band, and this is the foundation of understanding trend structure. Take a look at this historical Bitcoin chart on the 15-minute time frame. When the price candles are below the red high band, that's a short-term downtrend. Notice how the green lower bands highlights the swing lows. These are the starting points of potential reversals. Now, when price is above the VWAP channel, the red band marks highs and the green bands mark swing lows. And suddenly, the market begins to tell a story you can actually follow. Stick around, because in a few moments, I'm gonna show you a small tweak that makes VWAP work even cleaner. Something most traders completely miss, and this tweak matters a lot, especially when we ran the hypothetical backtest on the US stocks later. Alright, let's tweak the VWAP for the maximum clarity. By default, the length is 20, but changing it to 21 smooths the things out and catches the trend shift cleaner practically on US stocks. This small adjustment may seem subtle, but when we check the hypothetical backtest on US stocks at the end, you'll see how dramatically it impacts results. And don't skip the next section, because the second tool we're adding will make the chart almost start guiding you where to look next. Now it's time for the second tool, the swing arm meteor trend, added from the indicator section. At first glance, it might look complex with triangles, bands, and extremums, but the part we care about is the swing arm band, also called the FTS band, which is calculated using ATR. Once you see it in action, it becomes obvious which zones are critical. And here's the kicker. The next section will show how these zones start revealing their potential, but I can't fully explain that yet, so keep watching. Before we jump into trades, we need to optimize this indicator. Go into the settings, leave the time frame on chart. Set the ATR factor to 9 and then set the ATR period to also 9. Then clean up the style. Disable everything unnecessary so the chart stays clear, leaving only the bands visible. Once that's done, the next section is where everything begins to line up on the chart, and trust me, what happens there is something most traders completely overlook, and it will make a huge difference when we tie it together with the VWAP breakout. And here's what I call the golden zones. When the FTS band is red and price is below it, we're in a downtrend. When price pulls back to that red band and fails to break through it, that area becomes what I call the golden zone. And here's the important part. We'll combine this with the VWAP breakout in the next setup, and later we ran the hypothetical backtest on US stocks. You'll see why these zones are so critical. Stick around, because seeing how this plays out on the chart will make everything crystal clear. Now let's flip it. The green FTS band, price above it, uptrend. Pull back to the green band, that's your bullish golden zone. And again, we'll tie that with the VWAP next. Now, let's put it together. In a downtrend, price pulls back to the FTS band, marking the golden zone. And then breaks below the VWAP lower band. That's your sell signal. In an uptrend, price pull back to the green FTS band, golden zone, and breaks above the VWAP upper band. That's your buy signal. And here's the part that many traders skip: proper risk management. Risk management is simple but critical. Never risk more than 1% per trade. For sell trade, enter at the candle close below the VWAP lower band. And set your stop loss above the VWAP high band or the FTS band. Take profits at TP1 1 to 2 risk to reward ratio and TP2 1 to 3 risk to reward ratio. For buy trades, enter at the candle close above the VWAP high band. A stop loss below the VWAP lower band or FTS band. Same take profits. But wait, don't go anywhere, because right after this, we're running a hypothetical backtest on the US stocks, and the results are going to be surprisingly revealing. The numbers really show how effective this setup can be under tested conditions. And here's the hypothetical backtest on the US stocks: S&P 500 on the 1-hour chart and 100 simulated trades. Win rate around 61%. Total P&L 310%. Profit factor 4.69, and the risk reward ratio was 1 to 3, with 7 consecutive wins and 5 consecutive losses, and a drawdown of only 4.9%. And remember, this is entirely hypothetical, purely educational, and not financial advice. Finally, if you want a simpler strategy to get started, check out the recommended video popping up on the screen right now. It's perfect for beginners, complements everything we just covered, and I'll tell you why it's worth a look after this video, so don't skip it.